Hi everyone, welcome back to the CMK Business Podcast. Let me start with a question. When do you think GST actually kicks in? Most people say, well, when I hand over the cash, right? But here's the surprise. In the world of GST, payment isn't just about the money. It can be shares, services, loans, or even offsets. And knowing the difference could save you headaches with the inland revenue. Stick with me for the next 5 minutes, and by the end, you'll be crystal clear on what payment really means. Now you might be thinking, why should I even care? Well, the definition of payment affects 3 really practical things. 1, the time of supply. That's when GST applies. 2, which return period your GST shows up in. And 3, whether you can claim deductions on second-hand goods. So whether you're a farmer, tradie, or running a small business, this is real money in your pocket. Here's where it gets interesting. Payment can take a few different forms. Cash or bank transfer, the obvious one. Shares or services, think of a barter deal. Loans, yes, borrowing money to pay can count as payment. Set-offs, where you and the other person can cancel out debts against each other. Deposits, those count as part payments. And hire purchase agreements, where GST is treated as if you've paid in full on day one, even though the money drips out in installments later on. The key takeaway, it's not about the cash moving, it's about whether the contract obligation has been met. Imagine you're a builder. You owe your local tool shop $2,500. But then the shop says, hey, our workshop door frame is broken. Can you fix it? You do the job, and instead of paying you cash, they just knock off $250 off your account. Guess what? For GST purposes, that's a payment both ways. The shop paid you for fixing the door frame, and you made a partial payment on your bill. No cash was involved, but the GST clock is ticking. Here's another one that trips people up. Hire purchase agreements. Say you buy a piece of machinery for your business on hire purchase. You don't pay the full price up front. You're making monthly payments. But for the GST purposes, the supply is treated as happening when the agreement is signed. That means GST is due right away, even though the money is spread out over time. And deposits. If you put down $10,000 on a block of land, that's already a payment for GST. It doesn't matter that settlement is months away. Now here's the trap that people fall into. Just leaving an invoice owing, saying, I'll pay you later, does not count as payment. GST won't recognise it until something real happens, like a transfer of value, a deposit, or a formal loan. So here's the bottom line. GST sees payment more broadly than you might think. Cash, shares, loans, deposits, hire purchases, and set-offs all qualify, but not just a vague promise. If you're not sure how your payments are treated, don't guess, because that can throw off your GST returns. Talk to your accountant, or better yet, give us a call here at CMK. Thanks for tuning in. Until next time, stay tax smart and keep your business running smoothly.